Now speaking, Julie Carricks, Treasurer and Senior Managing Director of Global Tax and Investor Relations. Good morning, everyone. The Toro company has issued their second quarter earnings release this morning, which can be found on their corporate website, thetarockcompany.com. On the call today are Rick Olson, Chairman and CEO, Angie Drake, Vice President and CFO, and Jeremy Stefan, Director of Investor Relations. The company will make forward-looking statements regarding their plans and projections for the future. This includes estimates and assumptions on financial and operating results, economic, technological, weather, market acceptance, acquisition-related factors, and other factors that may impact their business and customers. The earnings release details some of the important risk factors that may cause actual results to differ from predictions. Non-GAAP financial measures are referenced to provide meaningful comparisons of past and present operating results and cash flows. With that, Rick Olson will now speak. Now speaking, Rick Olson, Chairman and Chief Executive Officer. In the second quarter, Toro Company reported record top and bottom line results. Net sales increased by 7%, and net adjusted diluted earnings per share grew by 48% and 26%, respectively, year over year. Professional segment performance drove the increase in net sales, particularly in construction and golf grounds, with strong demand and production volume gains from improved supply chain efficiencies. The residential segment was pressured by unfavorable weather patterns and macroeconomic factors. Adjusted operating earnings as a percentage of net sales increased 250 basis points year over year due to net price realization, favorable mix, and productivity gains. Despite an inflationary environment, freight costs also slowed. The company is investing in technology solutions related to alternative power, smart connected, and autonomous products, which are helping customers achieve greater sustainability and productivity. Two of its FlexForce 60 volts products were recently recognized as Popular Mechanic's Best New Lawn Products of 2023. Toro Company has also partnered with the National Recreation and Park Association Business Council and become a turf partner for Bay Hill Club and Lodge and Latrobe Country Club to continue Arnold Palmer's legacy. They expect to continue growing their market leadership in both the near term and long term. Now speaking, Angie Drake, Vice President, Finance. The company reported record net sales and diluted EPS for the second quarter. Professional segment net sales were up 15.4%, driven by higher shipments of products across the segment, with notable strengths in construction and golf and grounds products, and net price realization. Professional segment earnings for the quarter were up 37.6% to $227.5 million. Residential segment net sales were down 16.8% due to lower shipments of products and partially offset by net price realizations. Residential segment earnings for the quarter were down 38.7% to $22.7 million. Gross margins were 35.8% for the quarter, up from 32.4% and 32.5% year over year, primarily due to net price realization, favorable product mix and productivity improvements, partially offset by higher material and manufacturing costs. SG&A expense as a percentage of net sales for the quarter was 19.5% compared to 18.8% in the same period last year. Operating earnings as a percentage of net sales for the second quarter were 16.3% on both a reported and adjusted basis. This compares to 13.7% and 13.8% year over year. Interest expense for the quarter was $14.7 million, up $6.7 million from the same period last year. The adjusted effective tax rate for the second quarter was 21.1%. Year-to-date free cash flow was a $1.3 million use of cash, primarily driven by seasonal working capital needs and increased capital expenditures. The company plans to deploy $150 million in capital expenditures this year to fund new product investments, advanced manufacturing technologies, and capacity for growth. The dividend payout increase was 13% over last year and nearly $25 million has been returned to shareholders year-to-date through share repurchases. For the full year, the company expects net sales growth in the range of 7% to 8%, professional segment net sales to grow at a rate higher than the total company average, and residential segment net sales to be down mid-teens from fiscal 2022. Gross margin is expected to improve compared to fiscal 2022, and adjusted operating earnings are expected to be an improvement as a percentage of net sales compared to last year. Adjusted diluted EPS guidance is narrowed to $4.70 to $4.80 per share. For the third quarter, total company net sales is expected to grow at a rate slightly below the low end of full-year guidance range. Professional segment net sales is expected to be similar to second quarter growth rate. In residential segment net sales is expected to have a meaningful reduction year over year. Gross margins and adjusted operating earnings margins on a total company basis are expected to be similar to the same period last year. Now speaking, Rick Olson, Chairman and Chief Executive Officer. The Toro company is encouraged by the expected continuation of strong demand across key professional segment markets, in an improving supply chain situation and the arrival of seasonably warmer weather. The order backlog was $2.3 billion at the end of fiscal 2022 due to growth of business, inflation, and seasonal variation, but the majority of it remains in construction and golf and grounds products. The macroeconomic environment is being closely monitored, with an emphasis on monetary policy actions, geopolitical environment, inflation, business and consumer confidence, and spending patterns. In the professional segment, there is robust demand for underground and specialty construction projects and healthy course budgets and demand for golf. For municipalities and grounds, there is prioritization of green spaces and interest in zero-exhaust emission products. Snow and ice management may be more subdued this preseason due to higher channel inventories. For landscape contractors, demand from turf professionals is expected to remain strong, and demand from homeowners who prefer professional products could be affected by the current environment. For irrigation businesses, project demand is expected to remain solid overall. In the residential segment, weather patterns, consumer confidence, and spending preferences are being watched, as well as how it affects channel inventory levels. The company is confident in its ability to drive value for all stakeholders over the long term, with a long track record of managing through economic cycles, growing scale, broad portfolio, and talented team. Raymond James analyst Sam Darkach inquired, "What have cancellation rates been in absolute terms and relative to 1Q and year-end?" Rick Olson replied, "Yes, good question. Cancellation rates have been extremely low in the last 24 hours. We're also seeing our factories produce more output than demand coming in. Demand from professional businesses, underground construction, golf and grounds has been particularly strong, even exceeding our expectations." Raymond James analyst Sam Darkach inquired, "What was the sequential increase in cancellation rates from last quarter?" Raymond James analyst Sam Darkach inquired, "Can you explain what factors are driving the lower than anticipated decremental margin despite a decline in residential sales?" Rick Olson replied, "The strength of the pro business and its higher margins are the offset for the lower numbers that we're projecting for residential. This allows us to produce more product to meet customer demand." Raymond James analyst Sam Darkach inquired, "Can you discuss your residential market share and trends in sell-through and product placement compared to peers?" Rick Olson replied, "We are extremely pleased with our market share position due to the success of our portfolio. We have seen strong performance across multiple channels, including our mass partners and dealer network. Our dealer business has been especially successful in the first half of the year." Robert W. Baird & Company analyst Tim Woj inquired, "Rick, can you provide an update on production rates in construction and golf grounds? What has caused the improvement since 6 months ago? What do you expect for the rest of the year?" Rick Olson replied, "This quarter's growth was largely driven by an increase in unit volume. Our production facilities have been performing well, and our suppliers are now able to meet the demand for key components. This has allowed us to increase our output and ultimately, our revenue growth this quarter." Robert W. Baird & Company analyst Tim Woj inquired, "Do you expect any improvements in the back half of the year compared to the second quarter?" Rick Olson replied, "We anticipate steady improvement in our operations as our suppliers become more robust. We have taken into account all factors when considering our guidance for the quarter." Robert W. Baird & Company analyst Tim Woj inquired, "What is the inventory level of pro landscape products, and how much of that market is comprised of homeowners versus professionals?" Rick Olson replied, "Inventory levels are higher than usual across our 3 brands, Toro, Exmark, and Spartan. The homeowner market makes up an appreciable portion of the landscape contractor business. Demand from homeowners has been less than expected, while demand for professional-grade products remains strong. This is reflected in the field inventory, which is higher for the more professional grade." Robert W. Baird & Company analyst Tim Woj inquired, "What percentage of the residential business do 60 volts products now constitute?" Rick Olson replied, "The 60 volts represents a small proportion of our overall business. Roughly 20 to 25% of our business is in the residential sector, making it one of the smaller categories in our portfolio." Longbow research analyst Dave McGregor inquired, "What adjustments have you made to guidance given the increased demand elasticity in the landscape contractor category due to the back-to-back sales events?" Rick Olson replied, "We've taken a conservative approach to our guidance, factoring in programs that have come back into play and lower than desired field inventory for professional products. Our entry-level products are in better shape in terms of inventory as they are more commonly purchased by homeowners." Longbow research analyst Dave McGregor inquired, "Could you provide more details on the increased marketing expense and how it helps drive your residential and landscape contractor businesses?" Angie Drake replied, "We've seen marketing expenses normalize, and have implemented a targeted marketing campaign for our residential group with the goal of increasing our premium brand in the long term. We are also beginning to see more targeted promotions to support sales. Longbow research analyst Dave McGregor inquired, how is the company planning to liquidate excess inventory and return to typical turns over the next few years? Angie Drake replied, I can confirm that our inventory levels are not where we want them to be. We saw some improvement in the composition of our inventory over the quarter, as VIP decreased a bit and the majority is now sitting in finished goods. This will result in improved cash flow for the second half of the year. CL King and Associates analyst Tom Hayes inquired, Rick, what differences have you seen in demand for golf across municipal, semi-private and private courses? Rick Olson replied, the demand for golf continues to be strong across the board. From professional courses to municipal courses, budgets for parks and outdoor activities have been prioritized, resulting in healthy conditions. This is enabling golfers to access the funds needed to upgrade equipment and make normal replacements, regardless of the type of golf course. Overall, we are seeing no difference in demand from top to bottom. CL King and Associates analyst Tom Hayes inquired, what has been the effect of the strong rental equipment demand on your business? Rick Olson replied, we see rental activity continuing to be strong and our own order book confirms this. We have gone back and looked at the numbers again and they validate that rental demand is strong and should remain that way in the near term. Cleveland research company analyst Eric Bossart inquired, what has changed for residential in the last 90 days, and how did expectations differ from what occurred? Rick Olson replied, at our last earnings call, we had noted that residential mower demand would be slightly lower than projected for the year. That prediction shifted when weather patterns changed and spring arrived early in key markets. The two key factors driving mower demand within this sector are weather and economic conditions. We were pleasantly surprised to find that consumer confidence in the banking situation is better than expected, which is a positive offset to what we're seeing on the residential side. This accounts for 75 to 80% of our business and is looking strong. Cleveland research company analyst Eric Bossart inquired, what is the appetite from retailers to bring in inventory during an extended season? Rick Olson replied, the dynamics of the season are what you'd expect from a dealer's perspective. Generally, early in the spring there is natural demand and interest, but if that gets muted, promotions help drive sales in the mid-portion of the season. However, dealers will be more cautious about medium reorders until they see retail momentum again. All of these factors have been taken into account in our guidance. Though we strive to make up for lost opportunity in the spring, it's not always possible. Cleveland research company analyst Eric Bossart inquired, can you explain why backlog and finished goods inventory increased and how the company plans to work down the finished good inventory? Rick Olson replied, yes, the increase in finished goods inventory is from our residential side and the backlog being on the professional side makes sense. Northland Securities analyst Ted Jackson inquired, is it fair to assume inventory levels will improve and free up cash flow in 2023 and 24? Angie Drake replied, yes, our expectation is that inventory will continue to improve. We've already seen improved terms in our residential area, but there is still a need to move work in progress, WIP, into finished goods in the professional segment. We made great progress in VIP and anticipate entering 2024 in a stronger position. Northland Securities analyst Ted Jackson inquired, what is the likelihood of gross margins coming back to more historic levels, such as 34% to 35%, due to inflation and product mix? Angie Drake replied, we expect gross margin improvement in F24, with Q3 similar to what we saw in Q2 of this year. We anticipate our first half of the fiscal year to have higher margins than our second half due to manufacturing adjustments and reduced volume. However, we continue to see productivity improvements and supply chain optimization that will result in overall gross margin growth. Northland Securities analyst Ted Jackson inquired, can you provide us with your expectations on margin improvement for Toro over the next year or two? Angie Drake replied, we anticipate F23 margin improvement and are committed to long-term margin growth. Northland Securities analyst Ted Jackson inquired, can you provide insight on the $2.5 million in cash flow to the finance affiliate and its importance as it relates to cash flow going forward? Julie Carricks replied, Ted, our joint venture with Red Iron will cause fluctuations in our balance sheet throughout the year. We can discuss this further during our meeting. We anticipate several such changes. Longbow research analyst Dave McGregor inquired, Rick, could you provide an update on the progress of your autonomous offering in residential? What opportunities exist to expand distribution and put the product in front of more consumers? And what feedback have you received from customers about sources of competitive differentiation? Rick Olson replied, we have a suite of robotic products that include the residential offering, which is currently in limited volume in the field and will be expanding availability this year and next. Our customers are drawn to the product's ability to operate in all conditions with less impact from things like tree canopies and access to GPS. We believe our advanced optical systems create a better understanding of its environment and provide a high value and customer satisfaction rate. Longbow research analyst Dave McGregor inquired, "What percentage of your motorized product sales are battery and hybrid today?" Rick Olson replied, "At this point, our electric battery solutions account for around 6% of our total product offerings. We've made it clear that we intend to reach 20% by 2025. We are on track with releasing a variety of electric and battery-powered products across all of our markets. Our golf portfolio has seen the introduction of zero-emission mowers, walk-and-ride vehicles, utility vehicles and people movers, all using lithium-ion technology. We have also released the residential 60 volts Flex Force platform, e-Dingo and Ultra Mud Buggy in the construction sector. To get to our goal of 20%, it's essential that consumers understand and accept electric as a viable solution. Therefore, we are committed to providing both electric and battery-powered options. Ultimately, the decision to purchase is influenced by various economic factors." Longbow research analyst Dave McGregor inquired, "What is the current acquisition pipeline looking like and how does it fit within your capital allocation plan in the next 3 to 4 quarters?" Rick Olson replied, "Our capital allocation process is highly disciplined and our priorities remain the same. Acquisition opportunities and M&A are part of those priorities. We're continually seeking out potential partners and never stop looking for the right fit. Our focus is on making sure we have acquisitions that we will be happy with in the long run, and we've had success in that regard." Julie Carricks replied, "Thank you, Tanya, and all of our investors for your questions and interest in the Toro Company. We look forward to providing a comprehensive update on our fiscal 2023 third quarter.